Ladies and gentlemen, welcome to the webinar sponsored by the 2018 Mining, Metals, and Money Cruise. To refresh your memory, this cruise will be taking place May 28th to June 7th, 2018. Of course, there will be links on this webinar discussing the cruise. I'm delighted today in this webinar to have the speakers from the cruise talking about the current state of mining and metals markets that we see in 2018, and to give you a preview of some of the opportunities that will be discussed on the cruise. I myself have been part of the faculty on 2 prior cruises, and I need to say, in addition to valuable information, there is a high probability, in fact a guarantee, that your family will enjoy the cruise as well as profiting from the information that you receive. When I was invited to be faculty on this cruise, I must say, my wife told me, you will be accepting this invitation. And I suspect that any members of the audience that mention this opportunity to their spouses may be similarly compelled to attend this cruise, which I assure you will inure to your benefit. The format today will be that each of the 4 speakers will have the opportunity to present an overview of metals and metal equity markets in 2018, to describe any potential surprises, either positive or negative, that they see in 2018 that haven't been widely reported elsewhere, and then of particular importance, talk about the special opportunities that they see in 2018, the opportunities that they hope to profile in their presentations on the cruise. Following that, we will have a discussion between participants, a general discussion, a Q&A moderated by myself. Remember that at any point in the conversation, there will be a question box on your computer screen, and you can type in a question for any or all of the panelists. Because this webinar is not live, we will assemble your questions, we will obtain answers to your questions, and we will distribute the answer to all of the questions to every webinar viewer who has registered for this call. So understand that you will receive yourself, as a consequence of watching this, the answers, to every question that was in fact asked. The panelists today are, of course, Mike Burnick, Brodrick, Byron King, and Brien Lundin. And as I say, each of my panelists will have the opportunity to do a presentation at the beginning of the call, followed by a question and answer. And Mike, if it's okay, since I know you the least well, I'd like you to lead off and tell me what you see in current markets and where you see the current opportunities.
Absolutely, Rick. Thank you, and thank you all for inviting me here. Well, I think precious metals are going to be really the best investment opportunity that we're going to see, not just in 2018 here, but well beyond. And you know, that's not a market consensus view right now, Rick. It's very much not that way, because really precious metals have been largely ignored by investors this year. I mean, after all, gold is closing out the year on a pretty weak note, up only 8%. You know, as we record this now, but that compares to a 22% gain for the Dow Industrials. So, you know, stocks have left gold in the dust, and naturally, gold and silver have simply, you know, lost their luster in the eyes of investors. You know, add to it the rises we've seen of cryptocurrencies like Bitcoin this year, and it kind of adds insult to injury. You know, it seems ridiculous, but they're talking about Bitcoin being a suitable substitute for gold. And you know, when you get to a point like that, you know the pendulum has swung far too much to the speculative side, and it needs to swing back towards you know, hard currency like gold. I mean, after all, gold equals wealth preservation. You know, Bitcoin, you know, for all the flash and dash, is pure speculation at this point. So what I think people should be aware and ready for is a major rally starting in the first half of 2018 in gold, precious metals, silver. Eventually, I think some of the things that are going on geopolitically in the world, especially with, you know, the shaky financial system we saw back in 2008, was only the opening act of more trouble to come. eventually we're going to see gold, break right through its old highs that it set back in 2011 and shoot up to $3,000 and then $5,000 an ounce. And, holding gold is going to be essential for that period of time we're coming into. But one thing I would tell every investor as I sit here today, if you already own any physical gold, don't even think about buying a single ounce of bullion more. And the reason I say that is because why would you want to settle for just tripling your money when gold hits 5,000 when you can increase your wealth 5 or 6 or even 10 times over? Because that's exactly what happened to investors who were in the right gold and silver mining stocks during the last big gold boom. And we're about to see that play out all over again, Rick, in the next couple of years.
Wow, that's all I can say. Wow. It'll be really fun to listen to your overview on the cruise, and also, of course, to hear the picks that you hope will deliver 10 to 20-fold gains. Sean, I'd like to move on to you. I suspect that you're less of a gold bug, but you'll have a lot to say about other metals. So tell us what you see coming.
Yes, well, I like gold and silver, but after wrestling with the markets for years, I have more recently just started to rise big trends, mega trends, and super cycles. And the nice thing about this, and I think many of the listeners will like this, is that riding a big trend allows you to look like a genius without being one. So if you want to look like a genius, come along with me and ride these big trends, because we are doing well. And the big trend that I'm going to talk about on the cruise is energy metals. They're in the early stage of a super cycle. Now, what do I mean by energy metals? I mean things like lithium, cobalt, copper, nickel, the things that are used to move the electric vehicle revolution along. And heck, cobalt just broke out to a 5-year high. And it looks to go much higher for reasons that I will get into. And in fact, I'd like you folks to look at a chart that I've included with my presentation. And looking at the chart, you can see that cobalt is up a stunning 190% since January 2016. That's even much more than the big gain in lithium, which is 114%. And that's the next closest contender. But lithium, the demand for lithium is projected to mushroom over 300% within 8 years, and yet the demand for cobalt is really supposed to outstrip supply more than that. That's the amazing thing. Now, lithium prices have been trading sideways for the past couple months, and we have seen retracements in these energy metal stocks, but that's okay. As long as you recognize it's a super cycle, it's a buying opportunity. And we know that, because plans for one new lithium-ion battery mega factory after another is being announced around the world. I have another chart which I've included, which I hope you folks can see, and it shows the planned lithium-ion mega factory capacity, what people were expecting would be needed by 2021. And you can see how much they thought back in 2014, it wasn't that much. And then 2015, they said, boy, we are going to need a lot more. And then 2016, they said, holy cowabunga, we're going to need a tremendous amount. And then in 2017, it just shot through the roof. And yet, this chart is out of date. We've had more and more mega factories announced since that chart came out. In fact, there are now 25 mega factories planned around the world. And so all those need to be built. And then when they're built, what will they produce? They will produce lithium-ion batteries, and they'll need the raw materials for those. And so this is very bullish for lithium. It's very bullish for cobalt. It's also bullish for nickel, copper, and graphite, which is not a metal, but it goes into these batteries. Now, there's no copper in a lithium-ion battery, and so some people might be thinking, well, heck, how is that going to do anything? But an electric car can use 4 to 5 times the amount of copper wiring that an internal combustion engine car does. Now, we call internal combustion engines ICE, and then electric vehicles are called EVs, except in China, where they're called NEVs because it's new energy vehicle. That's what they call them there. Anyway, a traditional ICE car has 40 to 80 pounds of copper wiring. An EV has 200 to 250 pounds of copper wiring. And so month after month, new estimates on the EV megatrend are coming out, and month after month, the old estimates are shown to be too conservative. no matter how optimistic they were. And according to a UBS Global Auto Survey, which was released last week, 1 in 6 cars sold in the world by 2025 will be electric. That's about 16% of the total. And just use the numbers from last year, 92 million cars hit the road. And so that would mean more than 14 million cars would be electric by 2025. That's up from 2 million last year. And we can talk about other projections. Goldman Sachs is actually much higher, and the fact is total vehicle sales are climbing because everyone in the world wants to drive like big fat Americans, right? So they're all buying cars, and so more and more of those cars will be electric. And so I just can't emphasize enough. Every single EV forecast has been too conservative, and so I welcome a pullback in any of these things. Now, we haven't really seen lithium go down, and cobalt has actually gone up. We've seen a pullback in copper, and that brings up risk in the markets, which I would like to address. And that is China. China is the main driver of the EV megatrend. I mean, it is global, it is worldwide, but that's really where it's concentrated right now. And we saw a pullback in copper prices recently because the miners and the smelters couldn't agree on a price. Now, and they couldn't agree on the price because people are worried that we could see a slowdown in China. And if that happened, yes, that would affect things. On the other hand, this transition to new energy vehicles, to electric vehicles, is going quite strong. That might slow things down for a bit, but it would not derail it. And I would rather ride this kind of megatrend than something else where you have to guess, well, will this be the year when it bounces back and stuff like that? So that's why I like energy metals so much. It's really doing well for my subscribers. Oh, and one more thing that I wanted to bring up. When I spoke at a money show back in February, I don't know if any of the listeners to this call were there. It was in Florida, Orlando, Florida, and I spoke there, and I highlighted one stock. And it was, in fact, a energy metal stock. And since then, since February, that stock is up more than 300%. I am going to try my hardest, try very dang hard to get you folks a pick with that kind of potential. And thanks to it being a megatrend, thanks to it being a super cycle, it's easier to look like a genius than not. So, I am going to do lots of research between now and the cruise. I am going to have my best picks for you, and I think we are going to just really have a great time exploring this aspect of the market where people worry about things going up and down, and yes, there are pullbacks and stuff like that, but as long as you're riding a mega trend like this, you can do very, very well indeed. And once these bull markets start, man, they can just run and run and run. And so that's the stuff I'll be talking about, and I look forward to meeting people on the cruise.
Well, Sean, given that the people will pay a substantial amount of money for this cruise, much more than they spent to attend the money show, we hope that the stock picks that you have for the cruise outperform the picks that you delivered at the at the money show. Moving on.
I will not let you down because let me tell you, the next leg is coming. It's going to be great.
I look forward to it. Byron, you and I have known each other for many years. You've had a great career before becoming a guru. You were a military pilot. You were a geologist. You were even, although you seldom admit it, a lawyer. Given all of that background, why don't you tell me where you see metals markets, tell me where you see the opportunities, and tell me where you see the risks. What are you going to do for folks on the cruise?
Well, I'm looking forward to the cruise because it's going to be close company with people. I mean, we'll see each other during the day at the different meetings. We will have dinner together. I mean, we'll probably round robin the dinner tables, where the guests will sit around the table, and it'll just be a wonderful time to exchange ideas and exchange thoughts back and forth. And so it's with the participants as well as spouses and children, whoever come along. So it's a very close, very personal type of relationship that goes far beyond just the newsletter where you're reading somebody's email or reading if it's that kind of email, reading the piece of paper that you get through the snail mail. But so that kind of cruise is a lot of fun because you can really learn a lot back and forth. I mean, I learn a lot of things from the people who come up to me at the conferences. I mean, so a lot of these people are very, very successful, very accomplished people in their life, with their own careers careers and their own businesses, and I mean, inventors and engineers and scientists who just, I learned so much from them, and it's going to be a wonderful exchange. As far as what's going to happen in 2018, my goodness, the two previous speakers gave a wonderful outline of where they think gold, silver is going, where the energy type metals are going. I really don't disagree with what they're saying. I view it along those lines, and I view it as even more because there are revolutions going on out there in technology, in electric vehicles, of course, but even in the mining technology and how you process these things. You remember maybe 15 years ago when somebody said, how do you get oil out of the ground? Oh, you get oil out of the ground, you put a rig out there and you drill a vertical hole and you hope that you get into the pay formation, and if you have 8 or 10 or 20 feet of pay, that's really good, that's great. But then within just a few years, we started hearing this strange word. Everybody thought it was a bad word at first, called fracking, and it was all about drilling sideways and through these shale beds, and you've got these, instead of 8 or 10 or 20 or 100 feet of pay on a good day, you're looking at thousands of feet of pay, and this was all technology driven. This was geophysics driven. This was metallurgy driven, with better drill pipe, better drill bits, better signal processing, better computers, better algorithms, better remote sensing. And now the same kind of technology that revolutionized the energy industry in the last, say, 15 years and made a lot of people a lot of money is now in the early days of this new commodity cycle for gold, for silver, for copper, for zinc, for lithium, for cobalt. That same kind of exploration and development technology that works so well. The same kind of computer power, the same kind of algorithms, the same kind of metallurgy, the same kind of out-of-the-box thinking, the same kind of statistical big data analysis that we saw revolutionize the energy industry is also making its way into the mining industry. So in addition to what we've talked about before, just the monetary issues on the fate of the dollar, will it go up, will it go down, what will that happen, what will make that happen, how will that reflect back in gold and silver, or the mega trends of electric vehicles, that need copper, that need nickel, that need lithium, that need graphite. In addition to all of that, you get back into the companies themselves, to the best of the breed type companies that are using these advanced exploration techniques. And so that too is part of the mix, and that too is part of what I look at in my newsletter in terms of, companies that are really breaking new ground in terms of just how they go about exploring, how they go about developing, driving cost out of the equation, because, it's not just about finding an interesting ore deposit or an interesting mineral deposit on the side of some mountain. The question is, can you build a mine? Can you make a mine out of this? Can somebody make some money doing this? And if you drive those costs out of the equation at every phase of your exploration, of your development and into production, now you're the low-cost producer. Now you're making money for the company, and you're raising the share value of the company that you're running. And so this is a whole other angle that's coming out. So I think that people who come on our cruise can look forward to just fascinating discussions at the lunch table or the dinner table, or just walking along on the Lido deck or the promenade deck or whatever this ship has. Where we're going to be talking about monetary issues. We're going to be talking about, mega trends. We're going to be talking about the kind of technology, the physics, the geophysics, the chemistry, the engineering that goes into driving cost out of the equation that make a company more profitable and that raise its shareholder value. So that's just one of the angles that I think our cruise guests can look forward to on this wonderful cruise that we're talking about today.
Well, Byron, I certainly recall having some wonderful discussions with you on our prior cruise, and I look forward to a rematch. There's almost no better circumstance than on a luxury cruise ship with friends, looking at fantastic scenery with spirituous beverage. To talk about the opportunities to make money in the upcoming year. Brien, you're, of course, our host on this cruise, so we expect more out of you than we do any of the other panelists. Tell us the way you see 2018, tell us the opportunities that you'll be discussing in your presentation and why people should join us all on this wonderful cruise.
What is particularly exciting about this event, and I think it's one of the reasons, or the reason why I believe your wife conspired with mine to guarantee that our participation in this event, is that this cruise has an agenda, an itinerary that far exceeds anything we've ever done before. It's actually a 10-day cruise through Europe, from Marseille to London, visiting France, Spain, Portugal, ending in London, or in England. And it's like nothing we've ever done before. The sights, the sounds, the camaraderie, the history, the culture that we're going to experience really takes it to a level we've never experienced before. And on what is legitimately the best cruise line, the best mid-sized cruise line in the world, voted thusly for 12 to 14 years running, I believe. So this is the best of the best, not only for the cruise, but also for the agenda, the speakers, and what we're going to be talking about. And I think, correct me if I'm wrong, but I think what has both you and I excited about this is that there are long-term secular trends for the metals that are converging in 2018 with shorter-term trends. Now, to address the longer-term trends, we have to look not too far in the past, but really over the last 7 years, 7 to 8 years, really, where we've undergone an unprecedented global coordinated reflation of fiat currencies. We've had a zero interest rate policy, coordinated zero interest rate policies across virtually every advanced economy across the world, even negative interest rate policies, quantitative easing, which is absolutely nothing more than massive money printing. So we've had this currency inflation, ultra-low interest rates, the lowest interest rates in 5,000 years of human history. And it's all coming to a head now. Now we're turning, and there's a general belief that we're going into a higher interest rate policy globally, and we're getting economic tightening and monetary tightening. In fact, this could not be further from the truth. There are two outgrowths from this massive economic reflation, this easy money policy like we've never seen anywhere previously in human history. One is massive debts. Now, this is a play we've seen before. This is something that, again, we've seen over and over through thousands of years of human history. Whenever governments expend beyond their means, whenever they create debts that cannot be handled through a growing economy, through tax hikes, through spending cuts, what always happens, and what will happen in this case, is that we're going to have currency depreciation. We're going to have fiat currencies, not just the dollar, but also the pound, the euro, the yen, and even other less prominent currencies will all be depreciated. And they'll all depreciate with each other. There will be a race to the bottom of the hill. And when that happens, there's only one thing, or there's one primary thing that they will be debased against, and that's gold. And to another extent, silver. So we're going to see higher metals prices as an outgrowth of this. The other thing that happens is that we've had such low interest rates combined with these debts. They create a situation where we will never have what was commonly believed as normal interest rate policies again. We cannot afford to have 5%, 6% interest rates, which is the normal, the so-called natural rate of interest throughout human history. We can't afford that anymore because it would completely bust the budget given the size of our debts. We can't even have 4%. We can't even have 3%. We've actually seen a number of Fed governors admit recently that they're aiming for 2.5% rates for the Fed funds rate. Now, combine that with their prediction, their desire to have over 2% inflation, and the result of that is ultra-low to even negative real interest rates for as far as the eye can see. And that is an incredibly bullish environment for precious metals. it really is rocket fuel for the precious metals markets, gold in particular. Now, one of the charts that I've submitted for this webinar is the so-called 14-month stochastic for gold. This is a momentum indicator, and it's a very long-term cyclical indicator. It shows you these broad bull market rallies and these long bear market troughs. And as you can see from this chart, we had a long-term bottom in the late 1990s for gold. Then around the turn of the century, we saw gold prices begin to go up. And for 9 years, we saw a generally bullish environment for gold and silver, for precious metals in general, and for a lot of other metals and natural resources. And during that period, you see that the stochastic remained high, remained over 60 and sometimes very near the 100 level. And as you look above that and you look at the price of gold, you see a very steady rise. What happened during that period? What does that mean for us as investors, especially investors in junior resource stocks? That means that we saw during that period stocks go up 2, 3, 4, 5 times. We had some that go up 10 or 20 times in value. And I cannot overstate the effect of that on personal wealth. If you're, during that period, during a long secular bull market in the metals and junior resource stocks such as that, you'll see stocks multiply in value, and then you'll take those winnings and you'll put them in another stock that will do the same, and another stock that will go up 4 or 5 times, and you'll have an occasional 10-bagger, and you'll have a few that only go up 2 or 3 times, and you'll have some losers. But the point of the matter is, when you have such an underlying conducive environment for metals and mining stocks that tends to lift all ships, your losers are much further between, and your winners and your multi-bagger winners are so much more frequent that true wealth can be built during a period like that. So I see that converging, and I see that happening next year, as you can see from these charts. We've gotten out of that long bear market, and we've made the turn upward, and I liken this period to the 2001 to 2003 period on this chart, where we're only beginning a long-term multi-year bull market. Now, the short-term picture we have is that we're about to see, or we are seeing, by the time this webinar airs, another Fed rate hike. And gold prices have declined going into this. But the previous 2 years, December of 2015, December of 2016, we had a very similar situation. We had gold decline going into a end of the year, last minute Fed rate hike. And what happened after that is that gold, either coincidental with the Fed rate hike or within a couple of weeks thereafter, began long-term multi-year rallies. So what does that mean? That means that stocks that are bought now at the end of the year, these are the two opportunities I see over the next year. Stocks that are bought now that are undervalued, that are driven to bargain levels, can rebound extremely, very strongly over the next couple of months. We've seen in the last couple of years companies that have large identified resources, gold or silver resources, that over the following 2 months after the Fed rate hike can double or more in value. So that's a very near-term opportunity that I'm pointing out in Gold Newsletter, and that we'll be able to point out to some degree in this call. Longer term, what we're also seeing is a lot of these junior resource companies have now filled their treasuries because of the rebound in the market. They've been able to raise money. They've been able to get prime exploration prospects ready for drilling. And by the time of our cruise in late spring, early summer, they will be busily drilling. That is an opportunity and a perfect time to talk about some of these exploration companies that will be coming out with big news in the following weeks, and having the chance to be on a cruise in the lap of luxury through some amazing events, excursions, and scenery, to be able to mingle with some of the top experts in the world on this sector and get their inside views on what the best opportunities are, what the best exploration stocks may be, it's really an invaluable opportunity, and one that if I were not speaking on this tour, you can bet I'd be in the audience listening, because it's one of those rare convergences of long and short-term factors that can truly build wealth, not just over the long term, but really in the near term at the time of this cruise.
Well, now everybody that's listened to this webinar so far will be excited to hear the presentations from each of the four of you. Given that I'm a fairly competitive person, and right now none of the attendees care what I have to say at all, I have to make my pitch. The truth is that I agree with much of what has already been said. My experience has been that bear markets, like the bear market that we've been through, are the authors of bull markets. And in that sense, a reasonably good market is guaranteed simply because the market that we are coming out of has been so bad. But it gets better, in fact. I'm just back from a 5-week road trip, beginning with Brian's conference in New Orleans, but literally taking me around the world. And what I learned is that some of the largest institutional investors in the world, some of the most sophisticated family offices in the world, some of the largest mining companies in the world have large amounts of capital ready to deploy in extractive industries and are in fact interested in opportunities. What's better yet is that this money was chastened in the past bear market and is unlikely to repeat some of the stupid mistakes that they made last time. In other words, smart capital is available to help the industry grow. In fact, very recently, one of the largest institutional investors in the world asked me to come to Shanghai to discuss subjects of mutual interest, investing subjects of mutual interest. This is literally one of the largest investors in the world. So the stage is set for money to come back in the business. And the business itself, the mining business, has become rapidly more rational. The truth is that the people on this call have talked about efficiency, not merely an increase in the gold price. We aren't asking mining companies anymore just to deliver production increases. We're asking them to make some money. The capital is available and the will in the companies is in place to see this bull market take place for the right reasons. Now, that's the macro advantage to the market. What I want to talk about, the opportunities that I want to talk about, understanding that the people who have the money and the time to come on this cruise will be fairly sophisticated, fairly high net worth investors, is I want to talk about a subset of resource investing myself. I want to talk about private placements, first of all, the best way to speculate in the resource businesses. And I want to talk about exploration, in particular, one very efficient subset of exploration. You see, we haven't had an exploration bull market since the beginning of the 1990s. And the project larders, in fact, the exploration larders of all the major mining companies in the world are seriously depleted, which means, first of all, that money will return to exploration, and secondly, that successful exploration efforts will be rewarded with takeovers at, I think, eye-popping multiples, very similar to the market that we experienced in the early 1990s, which was the best single market that I personally have ever experienced. So I will be talking about how to participate in a special subset, the most volatile, the most lucrative subset in investing that I know about, in the most efficient manner possible. I suspect that attendees will get their money's worth from the cruise alone, but I suspect that attendees who pay attention to the information that they receive will more than pay for the cruise, that notwithstanding, with the ideas that they get on the cruise. Now I'd like to ask the panelists a series of questions that come from the notes I took during their presentation. And we'll do it in the same sort of order that we did with regards to presentations. So Mike, I'm going to begin with you. The $3,000 to $5,000 per ounce price forecast that you made was a fairly aggressive forecast. And it's interesting that you say that the equities will in fact outperform the metals. If that is true, if you are looking for 10-fold or 20-fold or 30-fold returns on the equities, perhaps even the hyper-speculative money that has defected from metals and small-cap metals equities to cryptos will return. Do you believe that this is a valid observation on my part?
Yeah, absolutely right. And, the forecast, I guess, does seem pretty aggressive after a, 5 or 6 year long bear market in gold. And, as we sit here today and speak, gold is still 20% off of its peak. And that kind of goes back to what I was saying earlier, that many investors have just given up on gold. They believe that peak around 1900 and 2011 was the end of the bull market. But obviously nothing can be further from the truth. And the reason for that is exactly what Brien just pointed out. He hit the nail on the head, that the global economy is just sinking under a tidal wave of debt. We're well over $200 trillion today, and trillions more are being added to the global debt pile every single day. That's more than 3 times the size of the entire world economy. And so, if you're fearful over what happened in 2008, when that crisis was limited to a relatively small section of the financial system, mainly subprime mortgage debt, what we've got coming in the future is just going to be an absolute tsunami of trouble for the financial sector. And so for the reasons Brien pointed out, it's easy to see why gold will be return to, flock to in record numbers as a store of value, which has always traditionally been. In fact, if anything, I can tell you, Rick, I think $5,000 gold could prove conservative. And money will come out of cryptocurrencies, most of which will probably crash in the next market crash. It'll come out of stocks, it'll come out of bonds, sovereign bonds, which will be plunging at that point because of the debt crisis. And it'll pretty much come out of everything and going into gold, which could easily send it up to $5,000, $6,000 an ounce, perhaps even more.
Sean, moving on to you. I want a twofer. You're talking about the so-called energy metals. What would you say to the assertion that both silver and gold are hyper-efficient conductors of electricity? And particularly with regards to silver and its utilization in, as an example, microcircuitry, that silver could be regarded as a technology metal as well, also given its appropriateness in solar panels. Do you think that silver shares some of the attributes that you're talking about with these other technology metals?
Okay, that sounds like a one-part question, but I would like to make it a two-part question because I'd like to answer the question you gave Mike too about cryptocurrencies, because I just want to give a warning to everyone: do not try and pick the top in this market, because the market can remain irrational longer than you can remain solvent. But beyond that, in a world where the word currency is beginning to lose its meaning, and that seems to be happening with cryptocurrencies, with what we know are Russian and Chinese plans for what they might do to unseat King Dollar, things like that. In that kind of world, a very solid thing like gold can become much, much more valuable. And I think that's absolutely going to play out. And so I think gold and silver on the monetary side look extraordinarily good going forward because of the potential chaos around the world and the potential chaos in the financial system. That said, moving on to silver, we have seen tremendous demand for silver imports into China, for example, and the reason often given is because it's being used more and more in their booming solar panel industry. That's what silver is used for, because it makes those fantastic electronic connections, which is very, very hard to beat. And as long as the price of silver stays low, it'll be used more and more in the industrial sector, as long as the price of silver remains low. That's kind of the two-edged sword there, is that as the price of silver goes higher, people will look for alternatives to that. However, yes, we find more uses for silver on the industrial side every single day. And in technologies, absolutely. Will it become something used in the electronic vehicle revolution? It's not used right now, but that doesn't mean that it won't be used in the future. We just haven't found the use yet. But since we find more uses all the time, that would not surprise me one bit if it did happen.
Byron, moving on to you. You write your letter in conjunction with Jim Rickards, and so I actually have two questions for you. Is one of the potential black swans in 2018 war or the threat of war?
The answer is absolutely yes. It is. It's not really such a black swan. I mean, it may be a black swan if you have been living in some strange, bubblicious la la land or something like that. But the drums of war are beating, very, very strongly. There was a Jim Rickards, with whom I write and who I enjoy greatly our relationship and our collegiality. Jim Rickards has gone on record as saying that the war could start literally this winter by March, by the middle of March, as one of the dates he's put out there, because in terms of the technology development that we see in, say, North Korea, they are doing things that, if they continue doing this technology, they would be in place to be a true threat to the continental United States by mid-March. It gets into some technical details of missiles and guidance systems and rocket nozzles and things like that. But in terms of what the technology people who follow rocketry, forecast, mid-March is a date. So the answer is yes. I mean, I don't think that. I think you would have to be absolutely crazy to want to have a war on the Korean Peninsula. I mean, as General MacArthur once said, anybody who advocates a land war in Asia ought to have his head examined. I'm not about to disagree with that, but it's one of those things where, when the wheels start turning, it's very, very difficult to turn them off. And so there's that. And then also, just with the recent decision to, move the U.S. Embassy from Tel Aviv to Jerusalem, I mean, it may have a certain absolute rationality to it. It may have a certain aspect of, long-term support for the state of Israel. Yes, I get that. But I can see that as becoming another flashpoint in the Middle East. I mean, we could, just as we extinguished the war in Syria, now all of a sudden, we might wind up with a whole new set of insurrections and terrorism and life becoming very, very difficult across that whole broad swath of the Middle East and North Africa. So the answer to the question is one of the factors that Rickards talks about war. The answer is absolutely yes, and it's one of those things that we do discuss in the newsletter that we write.
Brien, you're our host. You're the last. We're talking about the 2018 Money, Metals, and Mining Cruise, May 28th to June 7th, 2018, from Marseille to London. Brien, you have been putting on conferences for almost as long as I have been attending conferences. Of course, the notable New Orleans conference, plus this long-running joint venture that you have with the money shows in terms of these cruises. It would seem to me that this will be a particularly interesting time with a particularly interesting group of panelists and, of course, a wonderful itinerary. If you could finish up, because we're running out of time, talking about what you hope to accomplish for your attendees on this trip, what you want your panelists to do, how you want to make this product a product that's competed with all of the great conferences that you've put on over the years.
Sure. Rick, one of the things that makes the New Orleans conference different is the ability to mingle with really smart people. Everyone's highly qualified. They all paid money to get in the door. They're the top echelon of investors and successful investors. But they also get the opportunity to mingle with speakers. Really, the people we bring in are equally as accomplished and globally respected and renowned and successful. So you get the opportunity to rub elbows with these the speakers in a pretty unique place in New Orleans and have some fun as well. Take that particular part of the opportunity and multiply it, and you get these cruises. You get the chance to have dinner, to socialize with the speakers, to get their views, get insights that they don't freely share in front of audiences where they're speaking with hundreds of people. You get to know them personally. You get to glean stories and insights and anecdotes that you'll never have the opportunity to do at any other type of event. And equally as important, in my view, is the chance to socialize with the other attendees, the other cruisers, the other investors. These are people, by their mere presence on this cruise at such an event, have identified themselves as really the smartest, some of the smartest people out there. They recognize the opportunity, recognize how they can leverage a lifestyle event with an educational and enlightening event and a chance to learn about investments that they would never otherwise get. It really is, as you know, having done a few of these, an extraordinary opportunity to make really lifelong friendships with others who share your views and are interested in the markets, and also to create wealth, create and build wealth. You know, I look back on some of the other events that I've done, and I keep all of my speeches and presentations and individual stock recommendations from these cruises, and I can point to many of these that have gone up, between 10 and 20 times. These stock picks have gone up between 10 and 20 times over. Not long after the cruises have happened. In particular, during that 2001, 2002 to 2011 time period, we did a few of these events, and the stocks that I was able to recommend at those events have just did extraordinarily well, multiplying in price again. And that's the kind of situation I firmly believe we're about to enter once again. That long secular bull run. We've had the 4 to 5 year correction. We've gotten through that. We're now firmly on an established uptrend, but we have yet to begin the real acceleration phase of this next bull market. And I think all of that is going to come together next year in 2018. So this opportunity, as I say, right before, for example, the drill results will come out from a number of these well-placed exploration companies, to know, to get insights from people who talk to these companies every day, who've done the legwork and the investigations. And you, of course, Rick, with your tremendous knowledge of the industry and your research team, to be able to share our views at that crucial point in the evolution of the markets, it's really just invaluable. I can't recommend it enough. And when you look at the affordable rates for an event like this, it just seems like a slam dunk for anyone who's a serious investor in the resource sector.
I need to wrap this up. I would encourage people that are listening to this webinar to go for more information on the cruise to goldnewsletter.com and download the brochure. I would also urge you, if you have any questions for any or all of the presenters, to submit those questions in the webinar. And remember that we will send everybody all of the answers to all of the questions. Finally, I'd like to thank all of the presenters on this call and all of the attendees on this call. And both I and my wife look forward to seeing many of you on this wonderful cruise. Ladies and gentlemen, and in particular my panelists, thank you and goodbye.